Welcome to AGORACOM, the Small Cap Epicenter, and AGORACOM TV, a daily, fast-paced, edgy show that brings you the best press releases out of the small cap world every morning at the open so you can hopefully profit from them and maybe even find your next great small cap investment. It's Wednesday, November the 7th. I've got some great press releases for you from both sides of the border. So let's start off first with China Clean Energy, trades on the U.S. OTC under the stock symbol CCGY. They announced a record Q3, and for those of you who are frequent watchers of the show, you know we love these up-and-coming Chinese resource and energy companies, and China Clean Energy obviously fits that bill. What do they do first? They're a leading producer of biodiesel fuel and environmentally friendly specialty chemical products made from renewable resources in China. Here are the Q3 highlights. Revenue, record of $5.5 million, up 48% from Q3 the year before. Gross profit, another record, $1.4 million, up 37%. Net income, just under $835,000 or 4 cents a share. That's up 67% from last year. But what I really like, in addition to the great numbers, is the following quote from Mr. Tai-Ming Wu, who's the chairman and CEO of the company. In addition to the results they put up for Q3, we also made significant progress towards the build-out of our new 100,000-ton, 30 million gallon per year biodiesel plant. Right now, they've completed the approval process, they've received their business license, and construction work is now expected to start in the fourth quarter of 2007, expected to be done in the fourth quarter of 2008. So not only is this company putting out great news, but it's obvious that they're significantly ramping up capacity. So we got an opportunity here for China Clean Energy to be a real up-and-coming company. The company right now is trading at $2.55. Back to Canada, Lignol Energy trades on the TSX Venture under the stock symbol LEC. Announced that they were awarded $2.7 million in additional funding from the Sustainable Development Technology Canada, which is SDTC. What does Lignol do? They're a developer of biorefining technologies for the production of fuel-grade ethanol and other biochemical co-products from cellulosic biomass feedstock. So a project led by one of their wholly owned subsidiaries was awarded this $2.75 million in additional funding. Who is the SDTC? This is important for you to know because this is the first time I'm hearing about them, and it's very, very important. Shows a lot about what Lignol has been able to accomplish here. They're an arm's-length foundation that's received just over $1 billion from the federal government of Canada as part of its commitment to support projects that address climate change, air quality, clean water, and clean soil, as well as first-of-kind, large demonstration-scale facilities for the production of next-generation renewable fuel. So this is obviously a very substantial organization. They're arm's length from the government, but they have received substantial funding, and they obviously have a lot of confidence in Lignol Energy. In addition to the $1.7 million previously awarded from SDTC, the aggregate contribution now from SDTC to Lignol and subsidiaries are just under $4.5 million. Here's what I also like. Vicky Sharp, who's the president and CEO of SDTC, and this is a third-party validation, which is what we really look for in these companies because everyone's going to call their own baby beautiful, but this really gives third-party credibility. Vicky Sharp says, Lignol's innovative technology can provide a key solution in the need to produce ethanol from low-value feedstocks, while at the same time reducing the chemical industry's reliance on petroleum. Should the project be successful, it will be an important step forward for the production of cellulosic ethanol in Canada and around the world. The company right now is trading at 90 cents. They're at the lower end of their one-year trading range, and this bodes well for the future of the company. Next up, not quite in the resources sector, but affecting the resources sector, so that's why we like this, making a repeat performance here. Sonomax Hearing Healthcare trades on the TSX Venture on the stock symbol SHH. Alcan Europe has adopted their hearing protection solutions for their employees throughout Europe. After 3 years of assessment, so there's a 3-year trial period which bodes well for Sonomax, Alcan decided to go with their solution and opted to equip its industrial workers with hearing protection from Sonomax. How big is this? Well, Alcan Europe has 15,000 employees, 9,000 of which are susceptible to high levels and toxic levels of sound. Initially, we don't have it. That's the only weakness in the press release from Sonomax here. We don't have an exact number as far as revenue or numbers, but what they are calling for is the initial fitting of several thousand employees of Alcan with this hearing protection. Here's what we also like. Jerry Rim, Alcan's leading buyer of Europe and Africa, said the following: In addition to passing the test and all the milestones that they set, this is what I like. What puts the final stamp on my decision is the fact that many Canadian colleagues who use Sonomax have had nothing but high praise for the technology. So you've got people at Alcan talking to their colleagues, which are the higher end of the resources space, and they're hearing nothing but good things about Sonomax. That's fantastic. Small cap company, big time, third-party validation. Also, I got a quote here from Nick LaPearl, president of Sonomax, just to give you an indication of why they're making a repeat performance. This follows a similar agreement with industrial giant Rio Tinto. The news is quickly spreading about the quality of our solution. We anticipate considerable additional growth among industrial companies as a result of these benchmark transactions. And when you got Rio Tinto and Alcan Europe, you know you're doing something great. They're trading right now at just 38 cents. That's about the mid-level of their one-year trading range. Take a closer look at them. Temex Resources trades on the TSX Venture under the stock symbol TME, as well as in Frankfurt under TQ1, intersected gold mineralization in several holes on their Juby property in Ontario. Full disclosure, obviously Temex is an AGORACOM client, but as usual, their press release met our newsworthy threshold and it speaks for itself. This is a recently completed 7-hole, 1,200 meter drill campaign at their Juby North gold property in Ontario. The property is subject to a 60-40 joint venture with Goldeye Explorations, and it did follow up on a previous program which discovered several new gold zones. Here are the highlights of this one. A new gold zone discovered yielding 15 grams of gold per ton over 2.15 meters. In addition, 6.76 meters grading 3.31 grams of gold per ton, including within that 2.52 meters grading 7.46 grams of gold per ton within the main Tyrrell structural zone. A phase 2 program is obviously being planned now on the back of this. Ian Campbell, president CEO of the company. I'm going to take a couple of excerpts here. The gold intersections in hole 89, which illustrate the potential for new gold discoveries. The results continue to expand the area of widespread gold mineralization in an area of the property that has received very little drilling to date. The company right now is trading 87 cents. They're at the high end of their trading range. They've been doing very well since late August, early September, and with news like this, looks like it's catching on. That's Temex Resources. Finally, FreeStar Technology trades on the OTC under the stock symbol FSRP. Again, another AGORACOM client, but this is a major press release, so we're going to talk about it here on AGORACOM TV. FreeStar's international card payments processor, their wholly owned subsidiary, has entered into a distributor and referral agreement with, I got to read this name, Siso Pendigia, the leading Finnish ICT product services and technology provider. We don't have very many numbers on this, but we do know they've already successfully completed first customer installations in the field. Now, how big is this partner in Finland? Because that to me says everything. The company last year had revenue of 85 million euros, EBITDA of 8.4 million euros. Profitability as a percentage of EBITDA was 9.8%. They've had massive growth if you actually take a look at the press release and the numbers. So that means this is obviously a very good partner for FreeStar Technology. That's a wrap for the day. As always, come on by the blog and add any comments you might have, or if you're looking for more great small cap companies, come by the AGORACOM marketplace. We've got over 75 companies listed by industry and exchange, so you can find companies that best suit your portfolio needs. That's a wrap for the day. See you tomorrow when no doubt we'll have another great lineup of great small cap news. Thanks. Have a great day.